Good evening, everybody. This is James Ramelli from Alpha Shark Trading, here to talk to you about a setup that we look at fairly often. It's a one-day income trade. So it's something that I do with weekly options in an index, in a stock. It can be in pretty much anything. And what I'm going to do is look at an iron butterfly setup that I can do today into tomorrow if the options market were still open. So what I need to do is first determine how much I think the market can move between today and tomorrow's close, and then set up a trade based on what that calculation is. So today, and I didn't do this trade today because the market was down so much that I feel like it can move quite a bit tomorrow, but this works in practice on any week. I would calculate it the exact same way as I'm about to show you guys right now. So take a look at the options chain here in the SPY. We closed right around 203.97, right around $204. So I would go and look at the 204 strike straddle. And what do we see here? It's trading at $1, right around $2, right? So off of 204, I would get upside targets of 206 and a downside target of 202. So I'll then try to set up a trade. So what I would do is sell the 204 straddle and then buy the options at those levels that the market implies the stock could go to. So it's a $2 wide iron butterfly, and I'm able to sell this for $1.39 or $1.40. So what I'm doing here is risking 60 cents to make a potential $1.40 through tomorrow's expiration. Now, as long as the market doesn't move more than what options market makers imply it can, I will make money in this position. Now, like I said, I would never do this on a day like today where the SPUs are down 45 handles, but in any other week, I could use this method to calculate and then set up an income trade from Thursday into Friday. If the market's flat tomorrow, this trade will absolutely crush it, right? Because implied volatility was up a whole bunch today because the market sold off a lot. And if we're flat tomorrow, it'll come crashing back down and we'll see this spread lose value very quickly. So this is just one way that I can look at this and calculate targets. We kind of talked about this a little bit earlier this week for income trades, but this one day trade, I just wanted to show you guys how even on a Thursday, the amount of premium that I can potentially grab by using this strategy is still very nice, and it still gets me a very nice, better than 2-to-1 risk versus reward setup on a one-day bet. So once again, this has been James Ramelli from Alpha Shark Trading. Thank you guys very much, and have a fantastic evening.